Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking copper futures in the metal quadrant, 1.5% rally, actually a little bit more than 1.5%, moving back toward the top of that range. We've got the top of the range lately in crude oil being somewhere around 280, 250 or so. We got to about 281.60 as we move back in toward the upper end of that range, with a lot of analysts thinking it could be time for a breakout. There's actually a London Metals Week going on. A lot of the analysts being quoted out there are very bullish the base metal, despite the possible slowing economy and kind of middle of the road Chinese data, remembering that China is the largest consumer of copper in the world. Currently, the supplies are tight though. Supplies continue to tighten, even with the loosening of some of the supplies in the Chilean Escondida mine. Copper is currently in a 45,000 ton deficit. Now, in the last month or so, you've seen a reduction in inventories in coppers at the London facility of about 105,000 tons. So that 45,000 ton deficit continues to chip away at what used to be very large inventories, which caused the sell-off in the first place. And again, China seems to be digging in. It's always about China when you're talking copper, digging in on the trade war, same as the US is. So that 45,000 ton deficit probably won't increase, but it will continue to sit at that level and continue to chip away at those supplies. Overall, the global demand for copper is still okay. And the dollar is struggling right now. The dollar continues to have trouble with the top of its range on the dollar index. A weaker dollar does mean higher base metals, higher commodities in general, with all else equal. And since the dollar is struggling at the top of the range, it certainly is not providing any sort of headwind for the rally we've been seeing in copper. This is Bob Iaccino talking about an up 1.5% day in copper from the CME Group trading floor in Chicago.